Hi everyone. In the Asian session, traders were still digesting the non-farm payrolls report. Trading in Asian stock markets is sluggish as stocks are down after an unexpectedly strong US jobs report. The July figures significantly exceeded forecasts. It means that the Fed is highly likely to maintain its hawkish stance, thus risk appetite declined. The US employment rate has been growing for 9 months in a row. The economy added 528,000 new jobs in July versus the forecast reading of 250,000. The unemployment rate fell to pre-pandemic lows of 3.5%. Labor data as well as other positive reports almost dispelled fears about the downturn in the US economy. However, job openings dropped to 10.7 million in June after a record high in March. It was the first consecutive decrease. The indicator hit the lowest level in the last 9 months. Apart from that, negative GDP figures for 2 consecutive quarters triggered speculations about technical recession. Investors assumed that the Fed could slow down the monetary tightening cycle. However, the speeches of several Fed officials were quite hawkish, so expectations of a softer stance lowered considerably. Over the weekend, President of San Francisco Fed Mayor Daly once again confirmed that the Fed would hike the key rate until inflation is under control. Fed Governor Michelle Bowman said that inflation in the US has not peaked yet. This is why the regulator should continue to raise rates. The Fed is trying to cool the overheated economy. However, its decisions will be greatly influenced by fresh macro stats. For example, it's sure to take notice of CPI and PPI indices, which are due this week. There will be more crucial indicators that the Fed will pay attention to before the September meeting. For this reason, it's hard to predict which steps the central bank could take at the meeting. Market uncertainty was weighing on the US dollar during the Asian session. The US currency kicked off the new week in the red. It's quite strange given that the Fed hawkish comments should have strengthened the greenback. It has been rapidly rising exactly amid such statements for several months. Today, the US dollar index was trading at 105.55 versus its main rivals. It resumed a downward movement after approaching a high of 106.93 on Friday. More than 70% of traders believe that the Fed will raise the benchmark rate by 75 basis points. For comparison, before the release of NFP data, the figure was 41%. The fact is that July non-farm payrolls also showed an increase in real wages. Wage growth is one of the key factors that boost inflation and the recession. That is why some analysts assume that the retreat of the US dollar from the highs of 2022 is only the beginning of a downward trend for the next year and a half. Perhaps the US currency was moving today in the bearish corridor of 106.25, 106.80 because of such pessimistic predictions. Despite a decrease in the US dollar index, the greenback managed to rise against the yen. Strong labor data signals an even wider gap in rates due to the Fed's hawkish stance and the Bank of Japan's ultra-loose monetary policy. US Treasuries also climbed considerably as traders adjusted their forecast for rate hikes. It was a bearish factor for the yen. On Friday, the US dollar rose to 135.49. It closed the week with a gain of 1.60%, notching the biggest one-day increase in 7 weeks. Today, the dollar-yen pair was trading at 135.15 with the prospect of further growth. However, apart from the widening gap in interest rates, the yen is also affected by oil prices and the risks of losing the status of a safe haven currency. However, it may return its luster with investors amid recession fears. In the Asian session, the pair was moving between the resistance level of 135.58 and the support level of 134.88. Analysts predict a short-term upward momentum for the pair to the level of 136. As for the Australian dollar, it has gained momentum today. The pair is trading with a slight increase at 0.6956. Last week, the Aussie lost about 1% amid strong NFP data and hawkish comments made by several Fed officials. However, on Monday, the market sentiment changed, which led to a drop in the US currency. The greenback is declining today, having lost part of Friday's gains. The Australian dollar is recovering after Friday's losses in the range of 0.6900, 0.6972. However, analysts are still betting on a bullish run of the US dollar. Now, speculators are anticipating US inflation data, which is sure to significantly affect markets. The report is due on Wednesday. It may provide clues about the health of the world's largest economy. Some analysts see a balance between inflation and slowing economic growth. However, these are just assumptions. If you want to learn the real facts and accurate economic news, subscribe to our channel. Don't miss our video reviews and open only gainful trades. See you!